Thank you for joining me. I'm Alex, and I would like to do an analysis of National Beverage Corp, or their ticker symbol Fizz. So what they do is beverages, shockingly enough, mostly sugar-free beverages. So the whole flavored sparkling water type thing that is gaining so much momentum right now. So I figured I'd do an in-depth on them because I kind of wanted to know if it's worth it to invest and where things might be going. So current price $54, which gives them market cap of $2.5 billion, and they went up over 12% on Friday. Dividend is 0, probably going to stay there for quite a while because they have so much to grow. So they will probably reinvest all their profits trying to grow as fast as they can to then in the end make some profit, and after that maybe pay a dividend. But I would figure that that's at least 10 years out, so don't count on the dividend at any point. Don't let that influence your decisions. Revenue is $1 billion, earnings $141 million, and that gives them a PE of 22, which does not sound bad. And also it's slightly lower than that, it's like 21.5-ish. So in all, not terrible numbers. They're growing. Slight downturn on the revenue, not a terrible thing. As I said, they're trying to grow, so obviously the earnings are not going to be great at this point. Total assets $452 million, total liabilities $121 million, which gives them a total stockholders of $332 million, which is up a fraction of a percent. And obviously things are going in the right direction, and I do see a future for sugar-free drinks because there is this whole obesity epidemic going on. Unfortunately, I don't really see 2.5% revenue growth as a good thing, especially in this stage of the business. Earnings downturn also, as I said, not great. It's not terrible, but definitely not going in the right direction. So just to sum that up, for a dividend investor, obviously you're out. For a growth investor, obviously you're also out. And for a value investor, the balance sheet looks good, and that's pretty much where it ends. PE is too high for the growth, especially. There's no dividend, and the balance sheet, yeah, it looks good. Yeah, that's pretty much it. So in short, I don't recommend anyone buy this stock at this time. If they can get their revenue growth back on track, I would probably want to invest in that. But at this point, I think the PE being too high and the revenue growth being too low would prevent me from investing in them. And I don't really see too much of a long-term future unless they're just going to be bought by Coca-Cola or something. So that's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.